for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
about to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did a long time in the beginning of my career. I was just making videos in my room, they had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen. I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids. And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career, I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line. It was 2010, and YouTube was only 5 years old. I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them. So she figured, why not give it a shot? I one day posted a video because I was sad, and I wanted to be creative and happy. She didn't know how to edit video or write scripts, so she winged it. It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one? She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience. A lot of the comments were, oh my God, there's a brown girl on YouTube. More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto. My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And we're pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's a real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman. What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what there used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, In coastal areas it's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agriculture commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Good afternoon, everyone. Live from the Interactive Brokers Studio in New York. It's Tuesday, July 6th. I'm Tim Stenovic. Carol Masser is off today. Hope everybody enjoyed a long 3-day weekend. Well, U.S. stocks snapping a 7-day winning streak. Treasury yields plunging to their lowest levels in months. All that weighing on banks as well as small caps. We'll have more on that in just a few minutes. Also, the ride-hailing app, Didi, just plunging down as much as 25% today. That's just days after a massive IPO. This as China cracks down on the company. We're going to have the details on that in just a few minutes. And speaking of China, today's big take, it focuses on whether China will surpass the U.S. to become the biggest economy in the world. Now, it's a question of if, not when, perhaps. We're also going to get the latest on the virus. For that, we're talking to the Chief of Staff of Neurology at Columbia University on how we can reach and educate communities of color about vaccines. And speaking of vaccines, a new story in Bloomberg Business Week is all about how much drug companies that make these life-saving shots should be charging governments that are desperate to protect their populations from COVID. That answer is, well, plenty. All that and more coming up in the next 3 hours. In the meantime, let's get a check of the trading day with Charlie Pellet.
Hi, thank you very much. Lots going on this Back to Work Tuesday. You mentioned Didi. Let's begin there because the stock is plunging 20.4%. The ADR is lower across the board here. The ride-hailing firm dropping after a Chinese regulator ordered the removal of its platform from app stores days after its U.S. listing. S&P 500 retreating emerging from a record as U.S. markets reopen after the Independence Day holiday. Energy shares leading declines. We begin with crude oil. West Texas Intermediate down 2.4%, 73.40 a barrel. Brent, the global benchmark, 74.58 right now, down 3.3%. 10-year yield 1.37%. 10 years up 15.30 seconds. The S&P down 19, a drop of 0.5%. The Dow's down 279 off session lows, down 0.8%. Nasdaq down 18, a drop there of 0.1%. The Nasdaq 100 index on the plus side now, up by 0.1%. Russell 2000 down by just about 1.6%. Apple shares higher after the iPhone maker is on track for its sixth straight positive session. J.P. Morgan Chase wrote that the stock, quote, for the time being, it is time to start buying again. Apple shares right now, they're up by 1.1%. Recapping, 10-year yield 1.37%. S&P down 19, down 0.5. I'm Charlie Pellet, and Tim, that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Let's get to the Market Drivers Report. And joining us now is Kriti Gupta, Markets Live reporter at Bloomberg News. She's with me in the Bloomberg Interactive Brokers studio. Also with me, Dave Wilson, stocks editor at Bloomberg News in the Bloomberg Interactive Brokers studio. A little party in here, guys, on this Tuesday afternoon. It's good to see both of you. Dave, take us into today's trade because a 7-day winning streak for stocks snapped.
Yeah, I mean, it's the way it's looking. I mean, you go through the 11 main industry groups in the S&P 500. 8 of them are lower, notably the more economically sensitive areas of the market, whether you're talking commodity producers, financial companies, industrial companies are all down. But, you know, you're talking about party. You know who should be having a party today?
Who?
Andy Jassy.
Right, because he's now CEO of Amazon. He's stepping into some
and
pretty
the
big shoes to
shares
fill.
are up 4.5%. It's the biggest gain in the S&P 500. Now, it's not all him. You know, it didn't hurt that the Pentagon decided,
Dave.
yeah, right. I mean, this $10 billion contract they gave to Microsoft a couple of years back, they decided, no, we're pulling it back. We're going to split it up between Amazon and Microsoft. We're talking cloud computing here, so it's Microsoft Azure and Amazon Web Services. Of course, Jassy came out of the web services business, so he's intimately familiar with all this back and forth that there's been over the contract. So it helps that maybe a few $1 billion more revenue is coming down the line for a business which has been really a fast grower for Amazon anyway. So, you know, you put it all together, I mean, this stock's really taken off.
Kriti, come on in here and talk a little bit about what you're seeing today, specifically with regard to oil, because that was the big story of the morning.
Yeah, absolutely. And then it completely turned around, right? I mean, we woke up this morning and oil was on the brink of $80 a barrel, and now it's negative. It's taking those energy stocks with it. So I think what's really interesting here is if you looked at the pre-market action in stocks, actually, it was energy stocks at the top, with tech stocks, right? So it's extremely related to oil prices, but then also that defensive trade right at the beginning. And then it all just flipped on its head, risk off all the way to where energy's at the bottom of the pack. And this is going to be really crucial because if you actually look, I'm going to nerd out here, Tim.
Okay,
Bear
nerd out.
with me,
We're ready.
Nerd out. If you actually look at the correlation between oil and stocks, it is negative for the first time in 4 years. And here's why that matters. It's because when you see oil rally, it's because the world is growing, there's this oil demand, people are traveling, people are getting new jobs, people are spending. Same thing with stocks, right? They rally when there's good economic news. You're supposed to forecast that out. So technically they're supposed to move together because that's good news in the underlying economy. But right now, they're doing the opposite. And that really has everything to do with those inflationary concerns. When you start to see oil hit like $80 a barrel or higher, you start to have leaders of the United States, of India, of China come out and say, well, hold on a second. This is going really fast. This is going to hurt our consumers that need cheap oil to function, to drive, to have a good 4th of July party. And that's where you're starting to see stocks say, well, hold on a second. This is actually a risk-off kind of tone.
So, Dave, are you seeing that those inflationary concerns also play out in the equity market? Because we're certainly seeing it play out with yields.
Oh, sure. And there's no doubt going to be more of that as we start getting second quarter results next week. But, Kriti thinks she can nerd out. I can one-up.
Okay, here we go.
Here's the thing, because whenever oil prices go up, you sort of have to have like a seesaw going on. I mean, it's good for oil producers, not so good for oil consumers, and for companies that depend on discretionary spending by consumers, because if you're paying more at the pump, you have less to spend on other things. But here's the key. When you look at energy stocks, they're less than 3% of the value of the S&P 500. So you look at a group like consumer discretionary retailers, automakers, home builders, you name it, you're talking 12.5%. So on balance within the market, you can understand why higher oil prices are an issue, shall we say, on a net basis. You figure it's good for the oil companies, and they have been the leaders this year within the S&P 500. They just don't amount to all that much, certainly not what they did years ago.
Greedy, I see you nodding your head right here.
Yeah, I totally agree. And you know what's interesting? He talked about a lot of those oil producers. I mean, we're talking about the folks that are back home in Texas. For me, that's where I grew up. And, there's actually a story coming out on the Bloomberg terminal here that a lot of these U.S. shale producers have actually taken advantage of these really high oil prices. They're locking them in, which I think says a lot about just where we are in the market right now. No one's expecting these prices to stay as high as they are. But you do see a lot of these shale producers, a lot of the companies that actually trade in the S&P 500 say, well, hold on a second, we're going to take advantage of this because we've been struggling anyway. We'll take what we can get.
And heck, you don't have to look all that far back to understand why. I mean, it was just a few years ago you had a shale industry bust.
Yeah.
So, they enjoy the boom for the moment, but they know what the possibilities are down the line.
Absolutely.
Hey, guys, before you go, Dave, I want to talk a little bit about the third quarter. That's where we are. I haven't seen you, either of you, since last quarter. We're about to start earnings season. Here we are. What are you going to be looking for as banks start to report?
Well, I've already touched on inflation. If you're going to talk about companies more broadly, when you look at the banks, it's going to be all about, what does their trading revenue look like? Because we've seen markets kind of calm down lately. Not great for volatility. We've also seen interest rates come down. Not great necessarily for the lending business. So, you put that all together, and then you look across other industries, and it becomes a question of how are they dealing with things like higher labor costs, higher raw material costs, higher transportation costs. There's a lot they have to get through. And how does the second half look like for them? Because we know the second quarter numbers are going to be great because the numbers in last year's second quarter were so lousy for many companies thanks to the coronavirus.
All right, some good stuff to keep an eye on. All I'm going to say, Creedy and Dave, we do not need Andy Jassy in here to have a party. It's fun enough with just the three of us. Creedy Gupta, Markets Live reporter at Bloomberg News. Dave Wilson, Stocks editor at Bloomberg News. Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. Today's number is 3. The Tokyo Stock Exchange will form a working group to discuss extending trading hours past the current 3 p.m. close, as well as other changes to its cash equity market. The group will discuss the significance, effects, methods, impacts of longer trading hours and plan to compile a report by October. The Tokyo Exchange now trades between 9 a.m. and 3 p.m. local time, with a break between 11:30 and 12:30 p.m., making the 5-hour trading day considerably shorter than many other regional rivals. Well, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. President Biden will be addressing the COVID-19 pandemic in a short time, and it is expected he'll outline new ways to get more shots into arms. Bloomberg Government's Emily Wilkins reports the push continues, despite the administration missing its own deadline of July 4th to have 70% of the population at least vaccinated with one shot.
It really seems like the White House is sending this message that they are entering a new stage of the pandemic as more and more people get vaccinated. So you really are, even though they did technically miss their target goal, you're still seeing a message from the administration saying, okay, it's July 4th and we're in this new stage now.
Again, Bloomberg Government's Emily Wilkins. The CDC has taken a look at the numbers and says the benefits of messenger RNA COVID-19 vaccines clearly outweigh the risks, despite heart complications seen in a relatively small number of mostly young men. So far, 1,200 cases of myocarditis have been reported out of about 296 million doses administered. The only mRNA shots authorized for emergency use in the U.S. are made by Moderna and Pfizer-BioNTech. Well, it was exactly 6 months ago today that a mob stormed the U.S. Capitol in an attempt to prevent the certification of Joe Biden as president. One of the speakers at the rally ahead of that riot is claiming he cannot be sued for inciting the unrest. Congressman Mo Brooks, an Alabama Republican, claims he is protected because he's a federal employee. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that, Nancy. Tim Stenevec live in the Bloomberg Interactive Brokers studio in New York. I'm joined now by Charlie Pellet. Charlie, good afternoon. One story on the top of the most read on the Bloomberg right now is all about what's referred to as long COVID. And a warning for people in the UK, at least young people, who are being warned that long COVID will surge as England sets to open coronavirus restrictions in the coming days.
And that warning, of course, Tim, from England's Chief Medical Officer, Chris Whitty. He does say he expects deaths to be, quote, much lower proportionally compared to previous waves, but says long COVID remains a worry. And what are we talking about with long COVID? It refers to a wide range of health problems suffered by people who have contracted the virus, which can persist for months after the infection, including fatigue, shortness of breath, chest pain, and cognitive disturbances. All of this is why health officials are pushing so hard to keep people vaccinated and out of hospitals to reduce the burden on hospitals.
Yeah, we're going to be speaking with Dr. Olajide Williams, Chief of Staff of Neurology at Columbia University. He's also the founder of Hip Hop Public Health in just a few minutes on how to reach communities of color when it comes to the vaccine message here in the United States. But it's a global push, of course, Charlie. And one thing that we're continuing to see around the world as economies do reopen is the unequal distribution of vaccines. So there are some countries like the United States, like the UK, that are pushing for reopening and full reopening. I mean, I don't know where you were for the 4th of July, but where I was, it certainly felt like 4th of July 2019.
Indeed.
Yeah, with people not even wearing masks.
Yep, I was watching from a balcony in Queens, and I could see fireworks virtually in all directions, both legal and illegal. Just to give you some context, so Whitty's remarks, coming at the Local Government Association's virtual conference, all of this against the backdrop of reopening plans in the United Kingdom. Prime Minister Boris Johnson.
This is Bloomberg Radio, and this is Bloomberg.
From July 19th. Tim?
Yeah, serious implications for the UK economy, especially if they are able to get back on track. Charlie Pellet, thanks so much for that. This is Bloomberg Radio, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Tuesday, back to work after a long holiday weekend for a lot of people. So the Dow, the S&P, NASDAQ all on the minus side. But the NASDAQ 100 index is higher, and that means a record. As of right now, Amazon and Apple briefly pushing the NASDAQ 100 to a record. Apple shares, they are advancing now by 1.1%. Amazon up by 4.6%. Rest of the market, though, lower. Stocks have snapped a 7-session winning streak as a plunge in Treasury yields to the lowest since February weighs on financial firms and small caps. 10-year yield 1.36% right now on the 10-year. 10-year up 17 seconds. Stocks off session lows. S&P down 18, down 0.4%. NASDAQ lower by 10, down 0.1%. The Dow down 278, down 0.8%. The price of gold up 0.2%, $17.95 the ounce, and West Texas Intermediate crude down 2.5%, $73.29 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much for that, Charlie Pellet. Well, I'm eager to get to our next guest, Dr. Olajide Williams, who's Chief of Staff of Neurology at Columbia University. He's also the founder of Hip Hop Public Health. It works in the public sector to address health inequities and to bring vital information to underserved communities through the power of art, music, and science. Dr. Olajide Williams has joined us before on the show several times. Dr. Williams, how are you?
I'm doing well. Thanks for having me back.
It's great to have you back. I want to start with, and we don't have a lot of time, so I want to get right to it and what you're doing with Hip Hop Public Health. What you're focusing on right now is helping to reach underserved communities of color with the vaccine. And I'm looking right now at the New York City government website that shows data for different demographics with regard to what portion of their population has been vaccinated. White people, 44% in New York City have been vaccinated. That compares to 38% of Hispanic and Latino and 29% of Black New Yorkers. Why are we continuing to see this disparity?
For it's multiple reasons we're seeing, but if you drill deeper into the numbers, there has been progress across the board. But the disparity is still very real. If you extrapolate across the country and you look at the national data, we've actually, Hispanics are doing very, very well, about 32% vaccinated according to recent trends versus their total share of the population, which is about 17%. But still, if you look at the African American data among blacks, we have also surpassed our share of the total population with about 13% across the country being vaccinated versus 12% of the total share. But I completely agree. There is still a tremendous amount of work that's left to be done. I've always said that building trust, isn't done overnight. It takes time. The real challenge is that we are racing against time. In this situation, we're racing against the variants. And so I think we just need to continue to increase, escalate, enhance, intensify our efforts across multiple levels and get to the place where we actually get to a door-to-door vaccination campaign and really hyper-localized messaging.
A door-to-door vaccination campaign, sort of like what we see with the census every 10 years. If you don't fill it out, somebody comes to your door and knocks on it, right?
Exactly.
And that's difficult, though, to do, especially with a 2-shot vaccine. It works with a 1-shot vaccine, the Johnson & Johnson shot, but how do we know that somebody will be there the second time around?
It's a challenge. It's a huge challenge. But I've always said this is the United States of America. We have robots on Mars right now. I think that there's nothing beyond our capacity to accomplish. And I think that we just need to bring the best minds together. But more importantly than the best minds, we need really grassroots approaches to the solution. I've always said, the closer you are to a problem, the closer you are to a solution. And so we need to get people who are actually living in and with the problem, and we need to figure out a way to work with them to extract, scalable solutions. And I'm sure there are examples in smaller communities across the country where success has been seen in communities of color. And so I think that we need to take these best practices and scale them up.
What are some of these best practices? Because you said it starts with trust and the idea of communicating. And I know several people that have yet to get a vaccine, and they're concerned. They have concerns. They want to wait. They say it's new. What's the right messaging here?
Well, the right messaging is to first acknowledge and be non-judgmental when discussing these issues with someone who is skeptical or hesitant or lacks confidence. I mean, we also have to acknowledge that there are certain people, no matter what we say or do, will continue to refuse. But I do think that there are still a number of people who can be persuaded. But again, it's going to take real personalized effort to really identify networks and leaders within networks, credible messengers, champions within these networks, who are open to the vaccination message or have themselves been vaccinated, and working with these leaders, these messengers, these credible individuals work with their networks, and it has to be one-to-one. It has to be one-on-one persuasion. At Columbia, where I am, for example, we have multi-layers of interventions, all the way down to those one-on-one conversations with people that you trust. And I think that, I don't think that, carpet bombing messages are going to work. I think we've already plucked all the low-hanging fruits from that type of approach. I think we're now down to that door-to-door, that one-on-one conversations with people that people trust.
Yeah, this is where the real work really begins. And speaking of that, we only have about 30 seconds left, but I want to get to some of what else you're doing at Hip Hop Public Health, because it's not just about the vaccine.
Oh, absolutely not. Absolutely not. We address health disparities and health inequity, as a whole, and we identify areas where communication. There's been great poverty of communications with certain communities, and we take our approach, which is a really scientifically embedded, evidence-based approach to motivating behavior change in these communities.
Right. Dr. Williams, we unfortunately have to leave it there this time. That's Dr. Olajide Williams, Chief of Staff of Neurology, also founder of Hip Hop Public Health. Bloomberg Philanthropies has provided a grant to Hip Hop Public Health. He's also a Chief of Staff of Neurology at Columbia University.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It certainly is Bloomberg Business Week. Tim Stenevec live in the Interactive Broker Studio in New York. I'm looking right now at shares of Didi Global Inc. It's the parent company of the ride-hailing app, Didi Chuxing. It is basically the Uber of China. It IPO'd last week. Shares are cratering right now, down more than 20%, reaching lows today more than 25% earlier in the session, all because as China is expanding a listing crackdown. We're going to speak with Matt Turner in just a few minutes for all the details on that. In the meantime, let's get a check on the trading day with Charlie Bell.
Hi, thank you very much. Here's what's going on. NASDAQ back in the green, wiping out earlier losses, up barely, up by just about half a point right now, but green on the screen nonetheless. The NASDAQ 100 index up 0.2%. Any advance for NASDAQ or the NASDAQ 100 index today will mean another record. S&P on the minus side right now down 14, drop there of 0.3. The Dow tumbling 251, down 0.7. Russell 2000 down 1.5%. Stocks have snapped a 7-session winning streak as a plunge in Treasury yields to the lowest since February weighs on financial firms and small caps. We've got the 10-year yield at 1.36%, 10-year up 17/30 seconds. The UK will relax self-isolation requirements for fully vaccinated people in England, even as that country's health secretary warns that getting back to normal could mean new cases jump to 100,000 a day. In the U.S., mounting concern about the spread of the Delta variant in unvaccinated people. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
So you have to remember that this variant is more contagious, and our vaccines are highly effective against the variant, and prior immunity is going to have some impact on the variant. So what you're going to see when you look at a map is that proportions of the population of the world that have low vaccination rates, that's where Delta is going to flare. And the flares are going to be very different because in places where even if the high-risk people are vaccinated, you will see cases, but they won't necessarily run into hospitalizations. And that's what you're seeing in the United Kingdom.
And Dr. Adalja is with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, all lower today. Pfizer down 1.4%. Its German partner, the ADRs of BioNTech, down 5.4%. ADRs of AstraZeneca down 1.3%. Moderna down 0.5%. Johnson & Johnson down 0.9%. Gold up 0.3%, 17.96 the ounce. Bitcoin up 0.5%, $34,039 on Bitcoin. West Texas Intermediate crude down 2.2%, $73.51 a barrel. Again, recapping, NASDAQ higher, the Dow, the S&P, they're both lower. S&P down 14, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that, Charlie Pellet. Well, as I mentioned, shares of Didi Chuxing, Didi Inc., I should say, the parent company of Didi Chuxing, the ADRs right now lower by more than 20.5%, absolutely plunging just a few days after going public here in the United States. Matt Turner is stocks reporter at Bloomberg News. He joins us now on the phone from Weehawken, New Jersey. Matt, let's start at the beginning here. A slide like this, all because of a regulatory crackdown in China. Give us the details here. What's going on?
Yeah, Tim, thanks. I mean, this all sort of started last week. We saw the IPO where they raised $4.4 billion, and shares kind of climbed in the first few days of trading and really pulled their market cap up close to $80 billion. But then, Friday we had regulators in China come out saying that they were going to launch this cybersecurity review into the company, and they had halted registration of new users, and we just saw shares kind of trade lower on Friday, and then that really escalated over the weekend. We saw that they expanded that probe into 2 other firms, including Didi, and they also asked the app stores to actually remove their apps from the app stores completely. So obviously that leads us into this morning where we saw, shares really take a nosedive. They were down as much as 30% in pre-market, and then, as you said, now they're still down well over 20% today.
Look, this was obviously not priced in. When you see a decline like this, a move of this magnitude, this is something that was unexpected by regulatory authorities. I'm thinking, though, about the timing here, right? Just a few days after the company goes public. What do we know about what the Chinese government has said to Didi and how they feel about it going public in the U.S.?
Yeah, I mean, it's a little unclear. We've had the Wall Street Journal report earlier that the Chinese regulators may have actually warned Didi as far back as 3 months ago and had asked them to delay that IPO. Obviously, that wasn't the case. Didi, in fact, even flagged in their regulatory filings for the IPO that there were some sort of, there were those antitrust concerns. They weren't actually sure if those would be resolved fully, if they were going to face more fines in the future. So it was something that may not necessarily have been priced into the stock, but it was definitely, if you kind of dug into the filings and even, spoke to some of those people and analysts in China, it was a concern, at least inside the company.
There's also just the latest in sort of a crackdown on Chinese companies. As you and Felipe write in the story, investors worry that the latest security-based probes have opened a new front in Xi Jinping's broader campaign against China's internet giants that began in November with the collapse of Ant Group Company's $35 billion IPO and subsequent antitrust investigations into Alibaba and Meituan. I'm wondering how investors are digesting this news when it comes to ADRs of other Chinese companies that are listed here in the U.S.
Yeah, it's been a pretty broad-based sell-off today. We had looked earlier at all these Chinese firms that have actually IPO'd this year. There are 37 that have started trading since the start of 2021, and of that group, 31 of those were lower at this point. As of about half an hour ago. So it's a pretty broad-based sell-off. Even shares of Goldman and Morgan Stanley, who were both underwriters of this Didi IPO, were lower today. So it's kind of it's hitting everyone that's involved, and even some of those ancillary stocks that are not obviously directly linked to Didi.
So does this make Chinese companies that are thinking about listing in the United States, does this make them think twice about doing that?
Yeah, I mean, from everybody that we've talked to, this is something that the analysts are saying is going to be a concern for some of these IPOs that are going forward, even some of the ones that are planned for later this year. And it is part of that push that we've seen from China and from Xi Jinping to try and get these Chinese firms to list domestically, in Hong Kong and in China, as opposed to listing in the U.S. market.
Yeah, I wonder, Matt, just in the last 10 seconds we have, what analysts are saying about the business, how this actually affects the company's business if new customers can't download the app.
Yeah, I mean, for now, it's a little unclear. They're saying that, like we've seen some of the other crackdowns, the financials haven't really borne any of the impact.
Right.
But, that's something that we'll be watching closely going forward.
Matt Turner is stocks reporter at Bloomberg News. He joins us live on the phone from Weehawken, New Jersey, giving us the latest on Didi Inc., the parent company of Didi Chuxing. Thanks so much, Matt, for joining us. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Elsa is bringing tropical force winds to Florida Keys. The National Hurricane Center says heavy rainfall is also coming down as the storm closes in on Key West. The storm is impacting the rescue and recovery efforts in Surfside, Florida as well, with winds hampering the use of large cranes to move heavy debris. Earlier today, officials updated the death toll. Now there are 32 known dead and 113 unaccounted for. Businesses and agencies around the world are reeling from another major ransomware attack. The White House is assessing where it came from. They believe it's from Russia. Bloomberg's Irv Chapman has more from Washington.
President Biden laid down a marker at his summit with Vladimir Putin on cybercrime. Richard Haass, president of the Council on Foreign Relations, said in a Bloomberg interview.
Russia continues to allow cyber operations against us. Governments are held accountable for terrorist actions that come from their territory. our governments are also going to be held accountable from cyber actions that emanate from their territory.
Haas suggested that the costs of preventing cyber attacks has to be made to outweigh whatever benefit Putin derives from them. In Washington, Irv Chapman, Bloomberg Radio.
President Biden this week will be addressing an expiring agreement with Russia on international aid corridors into Syria. Keeping that aid flowing was a key request that Biden made of President Vladimir Putin at their summit in Geneva last month, but it will require the two nations, as well as other members of the UN Security Council, to reach an accord this week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons, for that update. Joining me now is Charlie Pellet. Charlie, one of the most read on the Bloomberg terminal right now has to do with a relatively surprising move that we heard earlier today from the U.S. government. The Pentagon is moving to split its cloud deal between Microsoft and Amazon. Other tech companies will be invited to compete, according to the Pentagon, and Amazon said that the interference from the Trump administration costed the Jedi bid just a few years ago.
And interesting to check the stocks of both companies. We've got Microsoft shares down 0.4% right now. Amazon shares, they are surging up by 4.5%. It comes as the Pentagon announces plans for a, quote, multi-vendor project and says it intends to seek proposals from a limited number of sources, namely Microsoft and Amazon Web Services, the only two companies it deems capable of meeting its requirements. It says other vendors will be considered if they can show they meet the contract terms. This has, Tim, been a long story that's been developing over many years, but today we got this development with the Pentagon scrapping that $10 billion cloud computing contract.
Yeah, I got to tell you, Charlie, on my vacation over the last week, I finished Brad Stone's fantastic new book on Amazon, our colleague here at Bloomberg News, and there's a chapter that talks about the Jedi contract and what a surprise it was to so many analysts that Amazon didn't get it, considering the previous relationship that it had with government services, and given that Microsoft wasn't nearly as far along with its own technology. But it goes into detailing the way that the Trump administration spoke about it and the way that President Trump spoke about it. And the Pentagon indeed saying that it didn't want to get into a lawsuit here. The company saying, quote, with the shifting technology environment, it has become clear that the Jedi cloud contract, which has long been delayed, no longer meets the requirements to fill the DoD's capability gaps. That's according to the Defense Department in a statement that came out today.
And indeed, Microsoft says it understands and respects the decision to drop the contract.
Yeah, Charlie, I highly recommend everybody check out Brad's new book, all about Amazon and the rise of Jeff Bezos. This is Bloomberg Business Week, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story headline from the Bloomberg Professional Service. In New York, Governor Cuomo has declared a disaster emergency on gun violence. Stocks snapping a 7-session winning streak as a plunge in Treasury yields to the lowest since February weighs on financial firms and small caps. S&P down 16, a drop of 0.4%. The Dow down 257, down 0.7%. Nasdaq lower by 3, a drop there of less than 0.1%. 10-year yield 1.36%. 10-year up 17.30 seconds. Gold up 0.3, 17.97 the ounce. And West Texas Intermediate crude down 2.2%, 73.49 a barrel. Again, recapping, stocks lower. S&P down 16, down 0.4%. Nasdaq 100 index up 0.2%, trading at a record. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, here at Bloomberg Business Week, we've been covering the unequal distribution of vaccines around the world. What's happening here in the United States is certainly the exception, not the rule, with vaccines pretty much available for free to anyone who's eligible. But a new story in Bloomberg Business Week by James Payton and John Lauerman talks about life-saving vaccines becoming profit machines for drug makers, and for middle-income countries, protection from the virus can cost governments dearly. Joining me now is Joel Weber, editor at Bloomberg Business Week. He's with me in the Bloomberg Interactive Brokers studio. Also joining us is James Payton, healthcare reporter for Bloomberg News. He joins us on the phone from London. Joel, this is a fantastic piece that really dives into the cost and really what it costs countries around the world to actually get this life-saving tonic, right? This life-saving vaccine. And I'm wondering, how much should they be getting charged by these for-profit pharmaceutical companies that for decades have been boogeymen?
That's what we're finding out, right? And I think what sticks out to you, or to me at least in this story, is actually just what a big windfall COVID vaccines have become for pharma. I mean, we're looking at $100 billion+ business in 2021. And depending on how things go, you could just imagine the booster shots look like another wave of money for them. But there is this have and have not question that I think we as a newsroom have spent a lot of time thinking about and talking about and reporting about. And I think this story is another version of that, because there are the Americas, and granted there are a few countries quite like ours that can pull off what we can pull off. And that leaves the rest of the world in a different predicament. And especially for the low to middle income countries, the options do not look great. These vaccines are not always cheap. And so that brings in a question of soft power as well. So James, let's bring you in here. What stands out to you as you were writing about this story?
Yeah, well, good to be with you. I mean, I think you nailed it, in terms of the debate, because I think it's an important one to have. These huge sales that you mentioned that are flowing to the vaccine makers raise that question, right, of what is a fair price and what is a fair profit in the middle of a raging pandemic, and as you say, these vaccines are saving lives, they're rescuing businesses, allowing countries like the U.S. and the U.K., where I am, to reopen. Obviously, that is immensely valuable to those countries that are fortunate enough to have vaccines, but vast parts of the world have this limited access, and some of the people I talk to for this story question, what level of profits are justified given that uneven distribution we're seeing, and given that many of these vaccines are heavily funded by governments, by the U.S., by the U.K., Germany, and some nonprofits that themselves receive funding from governments. And there is an interest, beyond the humanitarian one, as we've written a lot about and discussed, there's a lot of stake from a health perspective, in an economic sense as well. If this virus keeps circulating, new variants could emerge that could be problematic, and that could prolong the pandemic. So, this is an important issue, and it's not just a question of the availability of vaccines and when these countries will get access to these shots, but also whether they'll be affordable when they finally do get the chance to purchase them. So
right.
I think it's an important topic.
Well, it's something that we're seeing play out right before our eyes with the Delta variant. If we were able to, this is the variant that is more concerning than other variants that were predominant here in the United States just a few months ago, and it's certainly ripping its way around the UK and indeed the predominant variant of new infections here in the United States, and it's certainly concerning. I wonder about some of the examples that you write about. Take us into what you learned about Senegal, for example.
Yeah, well, we looked at some countries around the world, and the thing on pricing is that there's a lack of transparency, and there's very little disclosure about who is paying what. So some of the prices are starting to emerge. We've looked at some regulatory filings, government statements, and some of the sources that we've talked to, and you can start to paint the picture. But you mentioned Senegal. It's a lower income country. They are paying. They agreed to pay about roughly $20 a dose for Sinopharm's vaccine. Now, this is one of the Chinese vaccine makers that we talk about in our piece as well. And now, you can look at some of these prices and say, what, that doesn't sound like a lot given, the potential of vaccines, given what we're talking about. And also some of these costs, to be fair, they pale in comparison to the economic costs of not vaccinating your population, right? I mean, you consider the trillions of dollars globally that's at stake. But for a country like Senegal, we looked at some data showing that their annual per capita health spending is less than $60. And for a lot of these countries, they're grappling with multiple health threats. Around the world, there are obviously diseases like malaria and HIV and many others. And these are, stretched health budgets that these countries are working with. And, they're not in a position, obviously, to spend big on vaccines. They might be able to do it. They might be able to pull it off. But then that raises the risk that they'll have to divert spending from other areas to pay the bill for vaccines. And that could have a long-term impact that we'll be writing about probably for years to come.
And that actually, there's this great quote that I loved in here, which is, "This is essentially a seller's market." And that's a quote that refers not only to what the U.S. companies can charge, but also even the Chinese ones, which I found surprising. That in some cases, the Chinese vaccines cost even more than the American ones, despite maybe not having the same efficacy.
Absolutely. And the China side to this, I think, is fascinating because there has been a focus. We have done some stories on this, but looking at the geopolitical benefits that China gets from exporting vaccines to the world. But overlooked, perhaps, is the financial benefit to China. China, you may recall last year, talked about vaccines being a global public good. They wanted to treat vaccines as a global public good. And, we're finding now, and Chinese companies are finding now that they're also, turning out to be lucrative products for Chinese companies as well. And now, one person I talked to at the Council on Foreign Relations pointed out that China likely sees that as something that's mutually beneficial. They can benefit, the world can benefit from their vaccines, but some of these vaccines are not cheap that the Chinese companies are selling. So.
Well, it's a fantastic story by James Payton along with John Lauerman. You can read James's story on the Bloomberg and at Bloomberg.com/businessweek. James Payton is healthcare reporter at Bloomberg News. Joel Weber, editor of Bloomberg Business Week. Joel's with me in the Bloomberg Interactive Brokers studios. For those of you listening in New York, Washington, D.C., and San Francisco, or watching us on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 1061 in Boston, Bay State Business is next.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, July 6th. We've got the NASDAQ 100 index at a record, up 0.2%. The NASDAQ Composite Index, little changed on the day. S&P retreating from Friday's record, down now by 0.4%. And the Dow Jones Industrial Average is down 267 points, a drop there of 0.8%. 10-year yield 1.36% right now. 10-year up 17.30 seconds. Stock snapping a 7-session winning streak as a plunge in Treasury yields to the lowest since February weighs on financial firms and small caps. The Russell 2000 index down now by 1.5%. Dow Transport's down 1.2%. S&P bouncing off the lowest levels of the day with a rise in consumer discretionary shares, helping to offset a decline led by the energy and financial sectors. Banks down by about 2%. U.S. service providers expanded in June by less than forecast as a measure of employment contracted, reflecting employers' struggle to attract workers in industries like hotels and restaurants, that according to the Institute for Supply Management. As for the Federal Reserve and the interest rate environment, Vicky Fernandez is Chief Market Strategist at Crossmark Global Investments.
I don't think rate hikes actually come any sooner than where expectations are after the last meeting. You see most expectations saying we'll see our first rate hike at the end of 2022 or beginning of 2023. I think that's probably right.
The OPEC Plus crisis has sent oil prices lurching as the cartel left the market wondering whether supply will rise or fall. West Texas Intermediate crude down 2.2%. Among some of the oil stocks, ExxonMobil down 2.7%, Chevron down 2%, EOG Resources down 1.7%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hello, hello. It's Bloomberg Business Week. Tim Stenovic live in the Interactive Brokers studio in New York. Carol Masser taking a well-deserved day off today. Well, Andy Jassy, it's day 2 for the brand new CEO of Amazon. Shares of Amazon are higher today by 4.79% as we speak, reaching a new intraday record. But he's got his work cut out for him. Long-term, Jassy has to navigate Washington and European regulators and, of course, appease a growing workforce of hundreds of thousands of warehouse employees. Heather R. Younger is founder and CEO of Employee Fanatics. It's an employee experience consulting firm. She joins us now from Denver, Colorado. Heather, it's great to have you. How are you?
I'm doing great. Thanks for having me on.
So what is the advice that you would give Amazon's brand new CEO, Andy Jassy, who, mind you, has been somebody who's been at Amazon for decades. He's most recently head of AWS, in his first week of being CEO?
Well, I think no matter what, he needs to be really clear up front what type of leader he's going to be and how he might be different from Bezos, of course. And even though he's been there, setting his mark, deciding what kind of leader he wants to be and how he's going to show up for all of those hundreds of thousands of people who are looking to him for leadership. That's one thing. I think secondly, he's going to need to take some real clear steps to listen to those people, because I'm not sure anybody's been listening and understanding what their needs are, what their complaints might be, and just to be committed to doing the right thing as it relates to them.
It's so interesting that you said that element of listening, because when I was reading the notes that our producer Paul sent to me, you mentioned listening, and it struck me because, as I mentioned earlier in the show, I just finished our colleague Brad Stone's new book about Amazon, and I was struck with many parts of it, but he shares this story from a little over a year ago, April of 2020, when the United States is in the midst of this pandemic. Amazon is hiring so many new people. These are essential workers, the service quickly becoming essential to people who are in lockdown and need to get groceries and supplies. And Jeff Bezos made a surprise visit to one of Amazon's warehouses. But it was the first time that he had visited one of those fulfillment centers in years.
Yeah, and I think that's a really big mistake. I'm hoping that Jassy says, you know what, I'm going to be the listening leader. I'm going to be going around and I'm going to do a listening tour. Go to as many centers as I can, even if it's virtual or in person, but in person is probably better, so you can really see how people are living in the way in which they have to work every day and trying to get their work done. So yeah, I hope that would be his first step, is listening tours, just going around. The listening it'll go a huge way for those people because they hadn't been listened to. People know when they've been heard. They know when they're cared for by the leaders who they look to for guidance, and that would build a level of trust that he needs right off the bat, particularly with any new initiatives he's trying to get put through.
How does he do this at scale, though? Because this is something, Amazon is a unique beast, right? It has fulfillment centers all over the world. It's at hundreds of thousands of employees. How does Jassy do this in a way that makes it look like he's going beyond just doing it for show?
Yeah, I mean, in the end, he doesn't have to do it all by himself. He can have the whole C-suite. He can have outside consulting firms like My Employee Fanatics, right, come in and help with some of the listening sessions. In the end, it's when they know that they are being heard and that there's an intent to act on at least some of what it is they're saying, and they see the results, and then you feed them back through action, telling them what it is you're doing for them, they know they've been heard. It just makes a huge difference. It validates it. It makes them feel that the work that they're doing is meaningful, and they feel like there's more than just the day-to-day, but that it's leading to some bigger mission for the world.
Okay, so apart from the listening tour, what else can Jassy do, especially when it comes to working with other executives to help build up that team?
Yeah, I mean, I think, right off the bat, if he's able to establish with his leadership team that things are going to change, that it is going to be about making sure that they're driving a more positive culture, and that every one of those people on the leadership team has to take responsibility, so he's not in it all by himself. That'll be super clear. Making sure that maybe he does put someone in charge that really is super focused on having the pulse for employees, suggesting really good avenues for cultural improvements, and making sure that they're always keeping those at the front line of the customer experience right at the front of all their cultural improvements, so that they're, it's not so just coming from top down, but maybe he creates culture teams all throughout the organization, and they report into this new person, but making sure that there's someone that has the pulse. I think the other thing through all of this kind of crazy time is making sure that that he and his team and the team members can be adaptable, less fearful, and they'll be less fearful, more adaptable when they're aware of changes that are coming down the pike, so being super open and communicative about this.
It's interesting that this is all happening at the tail end, at least in the United States, of the pandemic. And it was announced at the beginning of the year, back in January, that Jeff Bezos would be doing this. But it's still the pandemic. And one thing that we're seeing happen around the U.S. is employees leave firms for new jobs. And in some cases, not even going into the office to be able to say goodbye to to their colleagues who they've known for years because of just where we are right now. What are the takeaways that we can learn from a transition like Bezos and Jassy's that we can all apply to our own corporate lives?
I think this idea of reinvention is a big one. So reinventing, yourself as a leader, and then and then if you're over an organization as beastly as Amazon, how do you kind of reinvent? But don't do it in a silo, and don't just do it at the leadership level. How are you more inclusive in your decision making? I think that's going to be the biggest thing for leaders coming forward. And I'm not just talking from the marginalized group side. I'm just talking about generally. How are we more inclusive in the decision making process so that people feel bought into things? And when we're talking about these people that are not coming back, it's probably because leaders aren't getting a clue. They don't understand what it is their people needed from the beginning. They needed to be listening, and they needed to be more inclusive.
30 seconds, Heather. We know on Wall Street, leaders of publicly traded companies are judged by returns. How are you going to judge Jassy?
I hate to say it, but those news articles, the things that you see, the coverage that's happening with employees and the sour taste that's leaving in their mouth, I think I'm going to judge him by how that goes down, and if he's going to be able to turn the tide of the negative culture and bad press that they're getting. What is he going to do to set his mark to create a more positive culture?
Yeah, it's a really good metric to use. Heather R. Younger is founder and CEO of Employee Fanatics. It's a firm that works with companies to help employee experience. Heather joining us from Denver, Colorado. Heather, thanks so much for your time. Really appreciate it. It's Bloomberg Business Week, and this is Bloomberg. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. More human remains have been found at the scene of the condo collapse in Surfside, Florida. As of this morning, there are 32 confirmed deaths, with 113 potentially unaccounted for. Surfside Mayor Charles Burkett says the rescue teams are dealing with challenging conditions as the outer bands of Tropical Storm Elsa move in.
The wind is hampering the large cranes moving very heavy debris. That's a challenge that they're attempting to work around right now.
Burkett says crews do plan to work nonstop. Weather officials are embedded with them to monitor the forecast. Continuing aid to Syrian rebels could hinge on President Biden's work this week on U.S.-Russia relations. Bloomberg's Amy Morris has more from Washington.
The agreement over international aid corridors into Syria is set to expire this week. Keeping that aid flowing into Syria was a key request that President Biden made of Putin at their summit in Geneva last month. But it will also require the two nations and other members of the United Nations Security Council to reach an accord this week. Former envoy James Jeffrey tells Bloomberg that the basic question now is what Russia will demand in return for allowing the aid to continue. The current agreement expires July 10th. In Washington, I'm Amy Morris, Bloomberg Radio.
The Vatican says Pope Francis is said to be improving as he recovers from intestinal surgery. A Vatican spokesman says the Pope woke up today, ate his breakfast, read the newspapers, and took a walk. And he says that the tests performed following the pontiff's Sunday surgery to remove half his colon yielded good and normal results. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy. Tim Stenevec in the Bloomberg Interactive Brokers Studios in New York. I'm joined now by Charlie Pellet. Charlie, when was the last time you had a Subway sandwich?
Saturday, over the weekend.
Really?
In the process of moving. It was convenient.
Okay.
It was affordable. What can I tell you?
How was it?
It was perfectly fine for what I got. However, I know where this story is going, and what's clear, Tim, is that change is on the menu at Subway.
Yeah, Subway Restaurants has sported the Eat Fresh slogan for years, even as it peddled limp tomatoes and processed deli meats. Now, as our colleagues Dina Shanker and Leslie Patton write, new bread, smashed avocado, and fresh mozzarella, the sandwich chain is trying to bring back the customers who've defected to more modern eateries like Jimmy John's and Chipotle Mexican Grill.
Indeed, the closely held company announced what it calls the biggest changes ever in its more than half-century history. Dubbed the Eat Fresh Refresh, Subway's rolling out a couple of new bread recipes, several on-trend premium ingredients, and a handful of new sandwiches, plus nationwide delivery service. It's hoping those changes will lure diners back to its stores after 5 years of declines.
Wow.
Skeptics of the brand say it won't be quite so simple because one of the issues, Tim, is that also they've got a lot of tensions with a lot of their franchisees. So it's just not just the menu that is an issue here.
Right, Subway, it's one of the most recognizable names in the restaurant industry. It has more than 22,000 U.S. locations, Charlie. That makes it the largest by store count. It's even larger than McDonald's. But at the same time, as our colleagues Dina Shanker and Leslie Patton write, it obscures a simple fact. Our tastes as Americans have changed.
Indeed. They've got a delicious-looking turkey Cali Fresh Subway sandwich that's pictured in our story. One of the keys there, not just turkey, but also smashed avocado. But as I mentioned, the other issue here has to do with the franchisees. The Aaron Allen at Aaron Allen Associates says they've been cost-cutting their way into failure for years now.
Yeah, we'll see if the company can pull it off, do this refresh and rebrand. Charlie Pellet, are you going to try one of those turkey avocado smash? You'll do
Looking
it.
forward.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Choppy session for NASDAQ, back in the green. That means back at a record. NASDAQ 100 index also advancing to another record. The Dow, the S&P, they're both lower. Let's get all the details as we head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. The Dow and S&P under a bit of pressure today, although off the session lows. Dow still down 232 points. S&Ps are down 12. And like you said, NASDAQ now in the green, up 14. The U.S. 10-year yield drops to 1.36%. Gold is up 5. Bitcoin is little changed. And among the main 11 S&P sectors, only consumer discretionary, real estate, and tech were in the green, while energy and the financials were under pressure. Leaders to the upside in the Dow, Apple and Salesforce. Dow Inc. and Disney led to the downside. And in other news, the Pentagon killed the Jedi Cloud deal. They want Microsoft and Amazon to split the job, and Didi plunged as much as 25% after a Chinese government crackdown. Wrapping things up, Amazon broke out of her trading range, gaining 4.9% to a record high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over at your Bloomberg Times Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plants are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
This afternoon's Big Take asks the questions, when will China rule the world? And there is perhaps a conclusion, well, maybe never. Tom Orlick is chief economist at Bloomberg Economics. He joins us from the Bloomberg 99.1 studio in Washington, D.C. Tom, it is really great to have you on the show, talking all things China when it comes to the race between the world's largest economy. The question, is it inevitable that China will become the largest economy in the world, surpassing the United States?
That's certainly the impression which China's President Xi Jinping would like to have left us with following the Communist Party's 100th birthday celebrations in Beijing last week. And China does have a lot of things on its side. A huge population, a lot of space still to catch up in terms of technology and productivity. At the same time, China's rise is far from inevitable. There are some significant risks out there. A shrinking working age population, a huge stock of debt, and the risk of increasing international isolation as the US and its allies become more cautious on the implications of a more powerful China. What we try and do in the piece is put some numbers on all those scenarios.
Well, give us those scenarios here, because you have sort of the best case scenario for China in here, and also sort of the worst case as well.
So if everything goes right for China, Tim, if they get domestic reform right, if they get onto an even keel in their relationship with the United States, if they manage to dodge a financial crisis, and crucially, if the official data which they share with the world, if their GDP data is giving a real picture on the state of the economy, if it's not exaggerated, if all of those positives stay in place, then by 2030, the Chinese will have pulled level with the United States, and pushing further into the 2030s, they'll accelerate ahead. But that's far from guaranteed. It's easy to imagine the opposite scenario, the nightmare scenario for Xi and the Chinese leadership. Domestic reform stalls. Private entrepreneurs are squeezed out by inefficient state firms. Isolation from the international community means they can't tap the ideas and the innovations they need to continue growing. A financial crisis hits. GDP data is exaggerated, and the real size of the Chinese economy is smaller than the official data suggests. If we see those negatives crystallizing, China will never catch up with the US and will remain trapped in perpetual second place.
I was so fascinated to read about the size of the workforce, the demographic challenges that China faces, because it's just in recent years that China relaxed its one-child policy to allow families to have two, and now in some cases even 3 children. But as you point out in your piece, it's not like people were rushing out to do that because it is very challenging and costly to raise kids in China.
Yeah, that's right, Tim. So I was actually working in Beijing in 2016 when the 2-child shift was introduced. And I remember sitting in the office and the headlines came across the terminal and the TV was blasting it out. And I looked around at my Chinese colleagues. They all had their heads down working. No one was sprinting out of the office, eager to begin expanding their family size. And I think that the reason for that is that China's young professionals face similar pressures to young professionals everywhere in the world. We start work later because we're spending more time in education. Work is stressful and time-consuming. Accommodation is expensive. Education is expensive. Medical care is expensive. And so what the Chinese government is discovering is, yes, relaxing controls on fertility is a necessary condition to increase the size of the population. But with all of these pressures on young people, it's not a sufficient condition.
What's the priority of the Chinese Communist Party in all of this? Is it to grow the economy to the biggest in the world, or is it to stay in power? And do those things conflict with one another?
Yeah, I think it's not so much the claiming the #1 spot in the global economic rankings, Tim, but it's continuing to grow in order to continue delivering on a higher quality of life for the 1.4 Chinese billion people, right? That's the Faustian pact between the Chinese Communist Party and the Chinese people. We will give you control as long as you continue to give us growth, as long as you continue to raise our standard of living. So that's the focus for Beijing. The byproduct of that is the economy gets bigger and on a certain trajectory overtakes the US and claims the #1 spot.
Tom Orlick is chief economist at Bloomberg Economics. He joins us live from the Bloomberg 99.1 studio in Washington, D.C. You can check out more stories from Bloomberg's The Big Take. It's at Bloomberg and at Bloomberg.com. Of course, it's also available on the Bloomberg terminal, a fantastic deep dive into the quest for China to become the #1 economy in the world, thereby surpassing the United States. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec in the Interactive Brokers Studio in New York. It's that time of the day, just after 3:30 p.m. Wall Street time. The song of the day, the chart of the day, and of course, the stock of the day. We're going to do that with stocks editor Dave Wilson in just a minute. In the meantime, let's get the latest on the trading day from Charlie Pellet.
Hey, thank you very much. And we have got 28 minutes to go ahead of the closing bell. NASDAQ at a record. NASDAQ Composite Index, the NASDAQ 100 Index also at a record. Amazon pushing the NASDAQ 100 Index to another record. Amazon shares up now by 4.8%. Also keeping an eye on Apple shares, they're advancing by just about 1.5%. The ride-hailing firm Didi Global plunging after a Chinese regulator ordered the removal of its platform from app stores only days after its U.S. listing. We've got Didi down now by 22%. Stocks have paired losses in late trading. However, it is still a red on the screen for the S&P, down 11 now, down by about 0.3%. A rise in consumer discretionary shares helping to offset the decline led by the energy and financial sectors. The Dow down 225, well off session lows, down by about 0.7%. Again, the S&P down 0.3%. NASDAQ 100 Index both trading at records right now. 10-year up 18.30 seconds, 10-year yield 1.36%. Gold up 0.3, 17.97 the ounce. West Texas Intermediate crude lower now by 2%, 73.63 a barrel. The UK will relax self-isolation requirements for fully vaccinated people in England, even as the country's health secretary warns that getting back to normal could mean new cases jump to 100,000 a day. And here in the U.S., mounting concerns about the spread of the Delta variant in unvaccinated people. Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
There are certain places, Arkansas, Missouri, Nevada, Mississippi, Alabama, where vaccination rates are really, really suboptimal, and COVID-19 is going to still continue to be a disruptive force in those states, while it's not going to be one in Pennsylvania or New York or New Jersey, because of the way the vaccination rollout has went and the acceptance of the vaccine by the population. So this is the next challenge, is trying to bring those areas up so the Delta variant is even less of a problem there than it is going to be for the rest of the country.
And Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, they're all lower right now. Pfizer, for example, down 1.1%. ADRs of its German partner BioNTech down 4%. ADRs of AstraZeneca down 1.3%. Moderna just turning higher, up 0.1%. J&J Johnson & Johnson down 0.8%. Recapping, NASDAQ at a record, S&P down 12, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
At Madison Square Garden, which, by the way, those shows are going to resume in November. He's actually playing a couple of stadium shows before then.
Wow, I did not know that.
Yeah, I mean, that's it. Once a month at the Garden. He's been doing it for years, and obviously that was interrupted by the pandemic, but it's coming back.
Hey, Dave, not a bad way to make a living.
I suppose. Working one day a month, you know, in terms of performance. I mean,
Yeah, it's a
obviously,
lot of practice.
you have to practice and everything.
A lot of
else.
practice.
Sure. No
so
question.
connected to, well, actually, what's the song called?
I go to extremes.
Okay.
Yes.
What is the connection to today's chart?
Well, we're talking about a couple of industry groups that represent the extremes in stock performance, at least for the second quarter. You know, if you looked at real estate, it was actually the best performer among the 11 main industry groups in the S&P 500. That was the first time that happened since the group was kind of carved out of financials back in 2016 and made a top-level category within the index. Now, on the other hand, utilities, which you'd think would go with real estate because you're talking about a couple of interest rate-sensitive industry groups, no, that's not how it worked out in the quarter. It was the one group out of the 11 that was lower. So, when somebody recommended that, you sell short the real estate stocks and buy the utilities, so kind of anticipating a reversal, it got my attention. It was a call made by Deval Joshi, who's the chief strategist at BCA Research. Now, he's not expecting a huge move, maybe 5% one way or the other, but it is something that's a real contrast to what we've seen lately when the ratio between the S&P 500 real estate and utilities index rose to its highest level since 2015. You've really seen it take off since late last year, actually, not just in March. It's kind of bounced around, or at least it did before, so the last few months, and you saw this real push in toward the real estate side of the equation and away from utilities.
Okay, so help me out here. What is the usual relationship between real estate and utilities index?
Well, think about it. You're talking about a couple of industry groups, where companies borrow a lot of money, where their dividends are relatively high, so they represent competition for bonds. So you figure, when interest rates are going up or going down, they would tend to move together. But that's not what happened in the latest quarter, and it was sort of an extreme contrast, historically speaking, for these two groups. So, to see this call come out, if nothing else, it kind of got my attention. And if you want to know more, folks, send me an email. I will get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, Dave, give us your stock of the day.
It's a company called Cytosorbents, and the ticker on this one is CTSO. Shares took off today because, it's a drug developer, and it got clearance from U.S. regulators for a study on a drug that would remove blood thinners during chest surgery. Let's face it. It's something you need to be able to do because you don't want patients bleeding all over the place. Right. And so this study, it's going to start over the summer here in the U.S. at least, and be completed in 2022. At least that's what the company is aiming for. Like I say, ticker CTSO, the stock's up more than 15%. It's headed for its biggest gain since April of last year.
But it's only up 6.65% so far this year.
Well, there you go. Now you can see why people are getting excited about this study.
Well, look for Dave's Stock of the Day just after 4:15 p.m. Wall Street time. It's on Facebook, it's on LinkedIn, and it's on Twitter @TheOneDave. Stocks editor Dave Wilson live with me in the Bloomberg Interactive Brokers studio. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey there, Nance.
Hey, Tim. President Biden says he is stepping up his administration's efforts to make vaccines easier to access. He's planning to mobilize surge response teams to areas where people are hesitant to receive a shot. He's also supplying more doctors' offices with vaccines. Biden says shots are still needed to prevent severe illness and death.
As I speak to you, millions of Americans are still unvaccinated and unprotected. And because of that, their communities are at risk, their friends are at risk, the people that they care about are at risk. This is an even bigger concern because of the Delta variant.
Biden says the Delta variant is already responsible for half the cases in some parts of the country. A bipartisan group of House members is endorsing the Senate's bipartisan infrastructure bill and urging its passage. This comes as more and more people are sounding the alarm about the need.
The American Society of Civil Engineers has been giving failing grades to the nation's roads and bridges for years, urging Congress to act. Executive Director Tom Peters commented in a Bloomberg interview.
Much of our infrastructure has been built by prior generations. We released with the economic study, what does it cost when we fail to invest in our infrastructure? $3,300 per family per year. That's the hidden tax that we all pay. The cost is going to get more and more as you kick that can further down the road.
Peters said the status of infrastructure varies with local weather and seismic conditions, but the need for maintenance is everywhere. In Washington, Irv Chapman, Bloomberg Radio.
The National Hurricane Center says Tropical Storm Elsa is strengthening and could become a hurricane before making landfall along Florida's northern Gulf Coast. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy. Joining me now, Tim Stenevec in the Bloomberg Interactive Brokers Studio in New York, is Charlie Pellet. Charlie, this story caught my eye by our own Peter Coy. It's in Bloomberg Business Week. Peter is economics editor for Bloomberg Business Week, and he covers a wide range of economic issues, but this one among the most read, and perhaps unsurprisingly, as Americans right now are thinking about the safety of their own aging condos and apartment buildings.
Absolutely fascinating story in Bloomberg Business Week. Peter Coy, an absolutely delightful, fascinating guy. If you ever have at a party and you have a chance to talk to Peter Coy, he's a guy you want to spend time with. Smart dude. But this story, absolutely fascinating. Ticking time bombs for aging condos in the United States, saying that we need more oversight. He managed to dig up a report called Breaking Point, examining aging infrastructure in community associations. It is a 2020 report from the Foundation for Community Association Research, and it says that the rap on condos is that owners and the boards they elect are poorly equipped to make important decisions about maintenance. It's one thing if it's a homeowners association. It is an entirely different thing when we've got the kind of condominium that we saw down in Surfside, Florida. Absolutely heartbreaking what's going on there. Condolences to all of the victims, a story that we're going to be hearing about for years to come in terms of the litigation there.
Well, as Peter writes, this bit from the report will sound familiar to condo owners. Quote, while homeowners will tolerate a modest special assessment in an emergency, evidence in this study suggests that it's often hard to convince them to contribute to long-term maintenance, i.e. higher regular assessments, substantial special assessments are particularly unwelcome. So it's hard to get people to buy into those improvements that in some cases are required for the safety of the condo.
Indeed, people want to spend money on short-term fixes rather than, in some cases, millions of dollars to get right at the heart of a problem. So lesson learned, perhaps, out of Surfside.
Well, listen to this stat, Charlie. Some 73.9 million Americans lived in condos, housing co-ops, or HOAs in 2019, according to the report. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Charlie Pellet, 13 minutes to go ahead of the closing bell. NASDAQ Composite Index at a record up 0.2%. The NASDAQ 100 Index also at another record up 0.4%. Stocks have paired losses. Yields have dropped to February lows. 10-year up 20-30 seconds. 10-year yield right now 1.35% on that 10-year. S&P on the minus side. Again, well off session lows, down 7, retreating from last Friday's record. And indeed, a week of records. The S&P down now by 0.2%. Got to keep it locked into Bloomberg Radio to see how things shake out, and of course, how Asian markets react tonight. The Dow down 200 points, down 0.6%. Worth repeating, NASDAQ 100 Index up now by just about 0.2% on NASDAQ, 0.4 on the NASDAQ 100 Index. 10-year going to repeat at 1.35%. Gold up 0.3, $17.97 the ounce on gold. West Texas Intermediate crude, big story there today. West Texas Intermediate crude dropping by 1.9%, $73.69 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, it is that time, the drive to the close. We are just over 10 minutes away from the close of the market on this Tuesday, July 6th. But I used to saying July. We are more than halfway done with the year. After all, joining us now is Randy Watts, Chief Investment Strategist at O'Neill Global Advisors, joining us on the phone from Miami. Randy, how are you this afternoon?
Tim, I'm well. I hope you and your family are well, and it's good to hear your voice.
Yeah, it's good to hear yours as well. Thanks so much for taking the time. We're doing well, thanks. Randy, take us into how you're thinking about the market. I mean, look at what we're poised to do today. The S&P 500 looking like it's going to snap a 7-day winning streak. The Dow down today for the first time in 5 sessions. How are you reading into it?
Well, I think technically there's a slight lag right now of the S&P versus the NASDAQ. That's really being driven by a rotation into large cap growth stocks. The market, though, overall is trending within a channel that is really dated back to November, with the upper end rising to about 4,500 and the lower end at the 50 DMA, which is about 4,211. Right now, the leadership is in tech, retail, and healthcare. Some of the more cyclical value groups like transports, materials, financials have been basically consolidating their gains from earlier in the year and probably need a little bit of time to go sideways before they make another thrust up.
How much higher does this bull market go?
I think it depends on 2 things. It depends on earnings and it depends on yields. As you mentioned a minute ago, the 10-year back to 135 gives an awful lot of valuation support for stocks. I think the thing investors are wrestling with right now is coming out of that first quarter earnings season. Earnings estimates went up quite a bit for the S&P. People are looking for $188 in earnings this year and $211 for next year. If those earnings come through, I do think there's upside on the market because the market would be about 20 times next year's earnings. But I think what investors are wrestling with is 2 things. First is there going to be a margin squeeze in the second quarter? Because we've seen a lot of costs go up, whether that's raw materials or average hourly earnings, which are obviously labor costs are going up here. And then I think the second thing they're wrestling with is because there are so many supply shortages, both in materials and also in labor, our companies going to be able to meet their production schedules for the second quarter and for the third quarter. And so I think that's why you've seen a little bit of a move back to growth here, is that people aren't sure whether they should trust those earnings estimates.
Well, where are you on the transitory versus not transitory debate? Because when you talk about the margin squeeze here, what you're talking about is higher input costs, and to what extent those margins are going to be hurt by those, and by a difficult time getting supplies and inputs. Is this something that's here to stay, or is this something that is indeed, in the words of the Fed, transitory?
I think it's less transitory than people think. People are having
Why do you think that?
I think for two reasons. First is that because people are having to offer workers higher wages in many jobs than they did before the pandemic. And once labor gets back up, it's not like they're going to lower those wages, right? So if you had someone in the kitchen in a small restaurant, you were paying $18 an hour, and now you're paying them $20, you're not going to cut it back to 18 once there's a little bit more labor force. You're going to keep paying them $20. And the second is other elements like rent. Though it's been down in New York City, it's up in a lot of places around the country, residential rents. I don't think those are reverting down, anytime soon. So I think there's some things that are going to be stickier than people suspect. So I do think inflation is going to run higher. To refresh for your listeners, inflation was 5% for 12 months at the end of May. So inflation is running high. It's been a problem. I think the Fed and many central banks around the world are willing to let these economies run hot because they're worried about the slowdown that we're coming out of. But I do think it's an issue.
Yeah, and look, you're kind of reading my mind here, because one of the stories that I want to talk about in a few minutes is by our own Alex Tanzi, talking about how soaring U.S. rents are the sticky part of inflation with staying power. And according to Apartment List, the median national rent climbed 9.2% in the first half of 2021. That's according to Apartment List. So that raises the question. You talk about rising rents. You talk about rising wages. What are the other metrics that you're looking at to tell you whether inflation is sticky?
Well, obviously, commodities are up a great deal. When you look at the commodity index, oil's up 50% year to date, aluminum's up 29, copper's up 22. And a lot of these, because of supply shortages, are not going to instantly go back down. They may go back down over time, but it's not like it's going to happen in the next month or two. So I think that's going to force companies to face an issue with either they have to let their margins get squeezed or they're going to have to raise price. And if they raise price, what is that going to do for demand? I don't want to sound too bearish. The economy is recovering. We are growing. It's just that the market's got a lot of good news in it. And we need those earnings estimates to come through for the market to continue to be able to move higher right here.
So you're saying the market's gotten a little ahead of itself?
I think the market's a little ahead of itself right now, but it's been supported by those low yields. Now, if the 10-year was higher, we'd be having a different conversation because there would be pressure. But I think the move back to growth stocks recently tells you that some investors are nervous about whether that out-year number of 211 is the right number.
Yeah, look, I guess also the question is really about how to be defensive. And not necessarily that you need to be defensive, and that's not what I'm saying what you're suggesting, but it does sound like that, you could be in for quite the ride. And how would you position your portfolio right now?
I mean, we do like some of the big cap growth stocks still. We do like healthcare. Healthcare in particular, we think is going to have a better second half of the year as the utilization rate of healthcare services gets back to normal. Obviously, there were a lot of healthcare areas that suffered during the pandemic as people didn't want to go to the doctor. They didn't want to see their oncologist. They didn't want to see their cardiologist. So I think that's gonna pick back up. We still like a lot of areas of consumer discretionary. People have been pent up. There's an awful lot of consumer savings waiting to get spent. People didn't buy a lot of clothes and shoes, et cetera, for a year. Now people are going back out. We like the travel space, hotels, airlines, et cetera. So I do think there's still a positive story with regards to this recovery. But I do think maybe some of the raw materials, transports, financials, a little bit ahead of themselves. So I would shy away from those in the short term.
Let's talk a little bit about some of the stocks that you are bullish on. Intuitive Surgical, the maker of the Da Vinci surgical device. Why are you so bullish on this?
I think there's a real secular theme going there. There's two things. There's a cyclical and a secular. The secular is that a lot more, they're the leader in laparoscopy, so operations that are done very minimally invasive. And they're the clear leader there. More and more operations are being done that way. There's a great expansion, and that's going to continue. Second, people put off elective surgeries over the last year because of COVID. No one wanted to go to the hospital. And I think now you're going to see things like hip replacements, knee replacements, et cetera, start to pick up. And that's going to really provide a nice tailwind to what's already a good secular story for an industry leader.
Okay, what about Nike?
Nike had a great number last quarter.
That was huge.
We're seeing a pickup in demand. I think people are spending more money on both apparel and on footwear. They continue to do well overseas. They've done a great job with expanding in Asia. They've also done a great job with their digital marketing and e-commerce, which is going to continue. So I think, like Intuitive Surgical, they benefit from both a cyclical pickup, what's going on right now, as well as with Nike, a secular pickup as they expand into apparel more, they expand in Asia, and they get more of their orders coming in digitally online.
Randy, we are going to have to leave it there. It is always great to chat with you. Thank you so much for taking the time and joining us on Bloomberg Business Week Radio. That's Randy Watts, Chief Investment Strategist at O'Neill Global Advisors, joining us on the phone from Miami. We are just over 2 minutes away from the close of the markets today. The Dow down more than 200 points right now. The S&P 500 down just over 8 points. That's close to 0.2%. The NASDAQ higher, I should say, by close to 0.2%. Well, coming up next, it's Bloomberg Beyond the Bell. This is our cross-platform coverage of the market close. My colleagues from Bloomberg Television are going to join us. You can see it on Bloomberg TV, on YouTube, and of course, on Bloomberg Radio.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, counting you down to that closing bell. Here to help take us beyond the bell, our global simulcast team, a team of one. Tim Stenovic, without the tie, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the most crucial moments of the trading day. And Tim, this was a day where actually all of the indices open higher on the day, but all of them right now in the red with the exception of the NASDAQ.
Yeah, and the NASDAQ, certainly the outperformer. Hey, a big thank you to Apple and Amazon for that. Look, guys, the Dow is off of those session lows. The S&P 500, though, looking to snap a 7-day winning streak here. That's the longest winning streak since August. The Dow, it's looking like it's going to close down for the first time in 5 sessions. Again, we're off of those session lows, Caroline, but still looking like we're going to finish in the red for the Dow and the S&P.
It's been such a weird day, hasn't it? From the start, we had oil at 6-year highs. We had concerns about inflation, worrying about what the Fed might do. Oil then comes off the boil. It's now in the red. And yields, really, it feels like, Taylor, today is a story of what the bond market's been up to.
An kind of day, Caroline, particularly when you talk about tech leading the gains, that defensiveness, because yields just continue to come in. You're now down 7 basis points on the 10-year to a 135, a 198, and I'm taking a look at the 50 and the 100-day moving average on that 10-year, just barely holding it in. I keep hearing if that breaks, you could be looking at 1% first to retest those levels before you're looking back up to 150.
Yeah, and we should point out, folding into all this, of course, you have dollar strength once again. Of course, that's playing a big factor into, of course, what you're seeing in the commodities space here. Getting the closing bells here in New York. Let's take a look. Dow Jones Industrial Average, 34,577. That's down about 211 points, down 0.6%. The S&P looks like it's going to settle in the red, down about 9 points or 0.2% here. The Russell 2000, that's your big underperformer on the day, down 1.4%, excuse me, here on the day. And of course, the big outlier on the day, that remains the NASDAQ indices, both of the composite and the NASDAQ 100, going to finish up roughly about 0.2%, but a lot of that is really owed to 2 stocks. That's Amazon finishing higher by about 4.5%, Apple up 1.5%.
Yeah, really interesting to see that, Romaine. I know you're going to talk about this in just a second, but Apple having a great day and also Amazon having a great day. Certainly not all the fault of Andy Jassy, only in his second day as CEO, of course, but also because of what we learned about the Jedi contract going to Amazon. Or excuse me, getting pulled from Microsoft and being split between Amazon and Microsoft.
Yeah, and as you talk about some of these big tech companies, how much of that is also a bond story? Because you're really seeing that play out on a sector level. I hate to break it to our radio audience, when we took a look at the gainers and the decliners, there is some red in the gainers, which sort of hints at how not very broad-based today has been. It is technology, real estate, and utilities. So really those bond proxies are in the lead. You're up 0.3% to almost 2.25%. You do have some losers in the gainers, but you go down to the bottom of the screen, and it is really, Romaine, sort of that rotation out of value as banks, autos, and energy, you're off 2.5% to more than 3% on the day on a sector level.
All right. Normally, Carol Massar does the gainers here on the day. She had a few too many wine coolers over the 4th. So I'm going to pick them up for us. Take a look here. You got Apple shares right now closing up about 1.5%. This is best day that we've seen in quite some time. In fact, the highest we've seen on Apple shares going back to January. And in fact, Amazon closing at a record high. And in fact, the percentage gain right now, 4.7% higher here on the day. That's the best day that we've seen for Amazon shares going back to November of 2020. And of course, if you had $1,000 that you invested back in November of 2020, well, you'd have more money today. That's all you need to know. CrowdStrike, Palo Alto Networks, all of these cybersecurity stocks getting the bid today. CrowdStrike closing the day up about 5%. And Newegg, I guess this is the newest meme stock that everybody's bidding up 42%. Why? Who knows, Tim? But it's up.
Yeah, I don't know why. Who tries to explain the latest meme stocks? Even people who are in the Reddit forums don't know what the latest meme stock is going to be. Romaine, can you answer that?
Yes, you buy like your computer. You want a mouse.
So I was thinking that. I mean, that's old school.
You ever one of those plugs? I mean, like you always need a plug every time you buy one of these computers, and it's never the right plug. And then they show you a plug, and it's like $100, and you're like, why? Because they're like it's gold plated, and you're like, I'll just take the $2 plug. That's
okay, so there's Newegg, one of the gainers today. Romaine got the gainers, I got the decliners today. Let's talk a little bit about Didi. Didi Global, the parent company of Didi Chuxing. This is, of course, the Uber of China. This is the big story today, guys, plunging more than 19% after Chinese regulators announced that probe Taylor into Didi. It also pulled the app from app stores, this coming just days after that $4.4 billion IPO. Uber is the second biggest shareholder in Didi, falling today by just over 1.7%, Caroline. Microsoft, hey, you know what? I got to tell you, this was red when I was doing this earlier. In the words, I know, totally busted.
Letting us down, Tim.
It's green, it could be red, it's completely unchanged.
They should make that like
as Taylor says, it's unched. But we talk about the Pentagon killing that Jedi Cloud deal. Remember, that was the $10 billion deal.
Is Caroline still here?
It's awarded. I can't hear. What's Romaine saying?
I don't know.
Caroline, I'm going to go ahead and skip IBM, which was lower fractionally today. Just send it on over to you.
Yeah, they had a poor day on Friday, didn't they, as they lost their key president.
Yeah.
Let's have a quick look at what's happening cross-asset, people, because I'm looking at an FX story that sort of tells the story of the day. For me, it tells a story of underlying concern within these markets, a risk aversion. The dollar up 0.4%. It bounced up as the day progressed. We have instead Norwegian krone and Canadian dollar, both in the downside as oil dropped. Dollar strength speaks to, of course, that caution, that risk aversion, because oil prices spiked higher to a 6-year high. We had China and the concerns there in terms of regulatory risk. Let's go across to commodities, because Brent crude actually came down from that high, maybe because of the dollar strength, maybe because we just thought the 6-year high in oil's prices just unsustainable, off by 3% on Brent crude as we await what OPEC Plus might do in terms of future production. Gas oil down by 3%. We have got heat so much, the temperature's roaring fiercely across the United States at the moment. That's of course put pressure, though we see on some of the soft commodities. I see iron ore off by 1.4%, but red across your screen on commodities as we have dollar strength, green across your screens if you're looking at sovereign bonds. The yields there getting crushed in Europe. Austrian bonds 7 basis points lower. Netherlands, we saw this flight to safety and to the havens in Europe as well as in the United States, Taylor.
It is green because it is priced higher, yield lower. It's a rate of change kind of day. You're now down 6 basis points, 7 basis points.
Really,
Sun
Caroline,
Valley, across the curve at a 136 to 199, really below that 2% level. Certainly catches my attention. And Tim, what's so interesting is it comes on a day when you saw a lot of flight to safety within big tech in the U.S. That was certainly not the case when it comes to Chinese tech. I mean, we're taking a look at the Golden Dragon Index down 3%. I was taking a look at the China Qs, which is the Chinese version of the triple Qs here in the US, and it is just the regulatory crackdown,
also known as
and a
Summer
fear that
Camp for
Beijing
Billionaires.
is really coming
With M&A
to break
already
up
quite
big
active
tech.
this
Yeah,
year,
you have to wonder
it's almost assured
what
that
this is
sticking these
to what
CEOs
end,
in a room
right? When
or on a
you have
canoe or hike
a
together
country
will bring
effectively
about
saying,
more
hey,
big
we are
ticket deals.
actively
Discovery is already buying AT&T's Warner Media, while Amazon is buying MGM Studios.
And I wonder
that puts the spotlight on Apple,
this actually
Comcast,
fits
and
in with the
Viacom
way
CBS
that
next.
China wants to
The best
grow.
the rest of us can do
go ahead,
is watch
Romain.
for hints and headlines and photos showing which best sporting CEOs were curious
right, but it was a surprise to
invested
Didi
in.
investors.
I'm Tara LaChapelle from
over the weekend.
Please go to
Yeah, but I mean, there's a lot of these risks that were
Bloomberg.com/opinion
sort of baked
or
into that. I guess what was a surprise to
on the
me
Bloomberg
was the
terminal.
reporting that we had out of Bloomberg News that apparently that the Chinese regulators had actually approached Didi about 3 months ago, saying that maybe you want to delay this IPO until you resolve some of the issues that whatever China wanted resolved, and the fact that that wasn't communicated, at least least not publicly to investors. That's a bigger cause for concern here. And I think if you're an investor in some of these Chinese tech companies, you have to start to wonder anything else coming down the pipe, whether the due diligence has really been done and whether you really want to go out on that limb. It wasn't just Didi that got slammed. I mean, you pretty much go down the list of these big China tech names. They all got slammed today. A lot of people reassessing Caroline. Well, thanks for coming back, Caroline. Reassess Caroline. Here, she's back in her chair now.
Back in my chair.
I always get worried when I don't see her in her chair.
You know, palpitations when some of us are on our desks because we're here most of the day. Meanwhile, I mean, you're right though, Romain. Like Didi,
she still owes me a slice of pizza.
Well, he bought donuts today as well, which was really nice. Didi is sort of so emblematic of what's happening in terms of China because not only does it hurt, of course, caution about buying into Chinese companies when they do list in the US, but also hurts some of the big US holders of these stocks. I mean, of course, it does affect Uber in terms of its share price. SoftBank, remember their venture arm has been really long Didi as well, so they're another one that's going to be impacted by all of this. Many sort of theorizing, and we don't like to do conspiracy theories here, Taylor, but there is this thought that, you know, this is targeting the US investor base rather than the local investor base.
A lot of investors saying that, and quickly here, I'll just say another risk on the horizon away from big tech has been pushing forward to that FOMC meeting minutes, of course, which we'll get Wednesday, Tim, and really some concerns of are we talking about tapering, and is it going to be even keeled between MBS and Treasuries?
There are a lot of conspiracy.
Yeah, look, the big, well, certainly the big question is to what extent is the Fed actually thinking about tapering, and the more hawkish tone that it took last month, and we'll certainly get a little bit more insight there. But Alex Tanzi has a new article out today that I encourage everybody to check out, and it talks about the stickiness of rental price increases.
Yeah.
They've gone up significantly in the first 6 months of the year.
Has anyone tried to renegotiate?
Exactly. That's what I was going to say. What happened to the idea of, you know, where we were 6 months ago, 8 months ago, when everybody was going in and renegotiating those leases because it was such a good time?
I know, Tim. If you had paid $1,000 in rent 6 months ago, you know what you're paying now today? It's like $30 million.
Not in New York City, my friends. Not in New York City. Well, that's going to do it for our cross-platform coverage this afternoon. Guys, thank you so much for joining us on Bloomberg TV, Bloomberg Radio, and, of course, on YouTube. We'll see you tomorrow, same time, same place.
I've missed a Romain.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, let's take a look at how the markets closed on this Tuesday afternoon. The Dow finishing the day down by 0.6%, snapping that 5-day winning streak. S&P 500 snapping that 7-day winning streak, down by 0.2%. Let's get a check on the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden says he's implementing a 5-point plan to tackle vaccine hesitancy in communities with low vaccination rates. The new plan focuses on outreach at the local, even family level through pharmacies, physicians, and community groups. Biden says the spread of the Delta variant should concern everybody.
Seems to me it should cause everybody to think twice. And it should cause reconsideration, especially in young people who may have thought that they didn't have to be vaccinated, didn't have to worry about it, and didn't have to do anything about it up to now.
The Biden administration just missed its July 4th goal of getting one or more shots into the arms of 70% of adults in the country. Well, the Biden administration is addressing complaints today that American forces left Afghanistan's Bagram airfield last week without notifying the new Afghan commander of the base. Pentagon spokesman John Kirby refutes that claim.
I can't speak for the level of information that went down the Afghan chain of command, but I can tell you that Afghan leaders, civilian and military, were appropriately coordinated with and briefed about the turnover of Bagram.
Kirby insists that officials were given as much information as security concerns would allow. The Pentagon says the U.S. pullout is now more than 90% complete. Expert-level talks are said to be underway between the White House and Russian officials due to the recent uptick in ransomware attacks. White House Press Secretary Jen Psaki says the latest attack this weekend underscores the need for companies to improve their cybersecurity. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much for that update, Nancy. One of the stories that I just talked about on our simulcast with our Bloomberg TV team was Alex Tanzi's piece that's all about soaring U.S. rents being the sticky inflation with staying power. Joining me now is Charlie Pellet in the New York City Bureau here at Bloomberg. Charlie, this is a wild story. And look, and I should say this is a nationwide approach here. So we should, step out of our New York City bubble. That's how I need to do this because New York City is its own animal. And what happens in Manhattan and Queens and Brooklyn is certainly different than other boroughs and one from one borough to another. But the median national rent, Charlie, climbed 9.2% in the first half of 2021. That's according to Apartment List. And the concern here is that the cost of renting a home is soaring and that it disproportionately affects low-income households and poses a threat to the consensus that the pandemic inflation will soon fade away.
Indeed. Fantastic story. But just let me take issue with the concept, Tim, of it just being a New York City issue, because when you've dealt with real estate in places like Boston, San Francisco, Seattle, some of the other hot tech booming markets, they've got their own real estate community, real estate issues in those towns too, and they will tell you that, hey, it's just a Boston issue or just a San Francisco issue. But to the point of Alex's story here, rents are the sticky inflation with staying power. Rents obviously rising at a rapid clip just at the time of the year when the largest number of lease renewals fall due, locking millions of tenants into, as you say, bigger monthly bills.
It's been pretty wild to see how quickly this has jumped, Charlie. House prices jumped the most in more than 30 years in the 12 months through April. That 15% gain in the benchmark Case-Shiller index over that period would translate into a wealth gain of $45,000 for the typical homeowners. That's according to Lawrence Yun, chief economist of the National Association of Realtors. That's for homeowners. This has been a good time for them because they've been able to refinance and they have that asset. But for renters who a few months ago could renegotiate, they might not be able to do that right now.
Indeed, and we quote an economist here named Sarah House, who says, quote, at Wells Fargo says, quote, it's a stickier trend than I think we're seeing in other components right now.
Charlie Pellet, thanks so much. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters. I'm Charlie Pelletta. Down Tuesday, stocks fell, snapping a streak of 7 consecutive record closes as a plunge in Treasury yields to the lowest since February weighed on banks and small caps. Russell 2000 down 1.4% today. The S&P lower, little changed, well off session lows, down 0.2%, down by about 8 points. We did see the Dow Jones Industrial Average down 209, a drop there of 0.6%. The NASDAQ 100 index advanced today to another record, up by 0.4%. And we did see NASDAQ up 24 points, also climbing to a record, up by 0.2%. 10-year, though, big story. Look at the 10-year down, up at 21.30 seconds. The yield, 1.35%. Gold up 0.3%, 17.96 the ounce. West Texas Intermediate crude today, right now down 1.9%. WTI 73.74 a barrel. Shares of Didi Global plunged today as the ride-hailing company faced both targeted scrutiny over its data security and a broader Chinese crackdown on companies listing their shares abroad. Didi today plunging by 19.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. Well, we're more than halfway through 2021, and while it is starting to feel like things here in the United States are starting to get back to normal for some people, there are many office buildings in New York City and around the country that remain relatively empty and not anywhere close to their pre-pandemic levels. Kamal Bhatia is Chief Operating Officer at Principal Global Advisors, joins us on the phone from New York City. Kamal, it's great to have you on the show. I want to talk to you all about work shifting, and especially in the context of asset management and the idea that asset management needs to shift in order to adjust to this new normal. First of all, let's start with what you think the new normal is.
Thank you for having me. I think the new normal is really about two things today. One is really about acceleration of this hybrid work environment, which we all know through the pandemic we were forced to work from homes, and it was suddenly thrust upon us. And I think the new normal is sort of balancing our ability to be in office, which is still very important, but also having this work-life balance to work from home and connecting with our clients and investors. And I think the second element of the new normal is really just becoming more digitally intelligent. And what I mean by that is having an ability to not only work virtually, but using data and AI to inform how you connect with your clients and how you invest in our business.
Well, what about when you connect with clients? How do you use data and AI to connect with clients?
I think there are a couple of things we are doing, which is quite interesting. One of the things we are doing is really becoming smarter about who we reach out and how we reach them. There are many clients who have become quite comfortable with a virtual engagement model, but there are many clients who still want to see us in person. So understanding your employee and client sentiment is important, how you connect with them. But also, we also have a lot of information on what our investors want from us, that information data set as it comes to how they engage with us, what their needs are, and how we take our client-facing staff to engage with them is probably one of the biggest changes we have made in terms of using data to reach our clients.
Well, let's take a step back and think about this from the employment perspective, from the perspective of Principal Global Investors. How are you guys thinking about working from home, the hybrid model, the work-life balance, and what are the new policies that you've put into effect?
So we've always been very progressive in that regard. For the longest time, even before the pandemic, just from a work-life balance perspective, and we're quite proud at Principal Global Investors to be consistently rated one of the best places to work in money management. And one of the reasons we got that accolade was our ability to allow our many employees. We operate in over 68 countries, and as you can imagine, there are different work situations in each of those countries. And we always allowed our employees to have a flexible work environment. But I think the biggest change post-pandemic that we have seen is this ability and need to understand employee sentiment and their engagement So what we've been starting to do is do more surveys to understand where employees are today versus where they were last month and where they're going to be next month, so we can meet them what their current needs are. We are going through a summer period where employees would like a certain working pattern, and as we get into September and the year ahead, we want to make sure we understand where they are in terms of their ability to both come into office, but also how many days they would like to come in and how they would work.
Kamal, I want to shift and talk a little bit about how you're thinking about the markets right now, how you're thinking about the traditional mix of 60% stocks, 40% bonds for investors who are looking for stability, but in an environment that we are seeing right now with low interest rates. I mean, historically low interest rates. Do you think that the traditional 60-40 portfolio is dead?
I don't think so. It's dead. I think, first of all, as a marquee retirement manager, I think it's all about balance. And there is no better balance than being diversified, and 60-40 actually represents a fairly good approach to having a diversified portfolio. I think to your point on low interest rates, it's really the 40 and the 60-40, which is being questioned moving forward. And I think the way we think about this is if you do need something to balance the risk reward of stocks, or we also are big investors in private markets. So the way I think about it is moving forward, thinking about your 40% allocation in terms of taking more exposure to private markets, but also continuing to have some exposure to what I would call income rather than just fixed income, but having an ability to have a ballast against what you have with your stock.
What do you consider income?
For fixed income, I think if you want to take more risk, clearly one of the spaces we have seen a lot of opportunity is in emerging market debt. As the world opens up, there are clearly opportunities outside of U.S. where a fixed income investor can get good risk premia and good income outcomes. So that's a place we're very, very focused on.
Kamal, finally, cryptocurrency. Is there a place for cryptocurrency in portfolios right now?
Well, I don't know if there is a place right now. It is certainly an interesting asset class as it evolves. It is clearly highly speculative today, but it is clearly interesting from an investment standpoint. So we'll continue to incorporate it in our thinking, but not today.
Incorporating in thinking, but not portfolios.
Yeah.
All right. Kamal Bhatia, Chief Operating Officer, Principal Global Investors, Principal Global Investors, joining us on the phone from New York City. Kamal, really great to chat with you. Thank you so much for
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Senevek in the Interactive Brokers Studios in New York. Coming up in just a few minutes, we're going to speak to Ian Kahn, a technology futurist and author, also the director of the Amazon Prime documentary Blockchain City, in the upcoming Bitcoin Dilemma. We're talking all things Bitcoin, cryptocurrency, and, of course, the underlying technology, blockchain. In the meantime, let's get a check of the trading day with Charlie Pellet.
Hi, thank you very much. Let's begin with a Bitcoin quote right now, up 0.2%. Bitcoin, 33,922. Records for NASDAQ and the NASDAQ 100 index. A choppy day for both, but they ended higher, which means a record. NASDAQ up 24 points, up 0.2%. NASDAQ 100 index up 0.4%. We'll give you the numbers first. The Y in a moment here with the S&P down 8, lower, little change, down 0.2%. Dow Industrials down 209, well off session lows, down 0.6%. Russell 2000 down 1.4%. Dow Transports down 1% today. 10-year yield up at 1.34%. 10-year up 22.30 again. That yield 1.34%. Gold up 0.3%, 17.97 the ounce. West Texas Intermediate crude down 1.9%, 73.70 a barrel. Stocks fell, snapping a streak of 7 consecutive record highs as a plunge in Treasury yields to the lowest since February weighed on banks and small caps. This headline from the Bloomberg Professional Service. 2 sources tell Bloomberg Russian government hackers breached the computer systems of the Republican National Committee last week. Around the same time, a Russia-linked criminal group unleashed a massive ransomware attack. So again, recapping, NASDAQ at a record up 0.2%, a retreat for the S&P down 0.2%. As for the market backdrop, Randy Watts is chief investment strategist at O'Neill Global Advisors, and he was our guest right here on Bloomberg Business Week.
Right now, the leadership is in tech, retail, and healthcare. Some of the more cyclical value groups like transports, materials, financials have been basically consolidating their gains from earlier in the year and probably need a little bit of time to go sideways before they make another thrust up.
And Watts, again, is with O'Neill Global Advisors. The Pentagon has scrapped a $10 billion cloud computing contract awarded in 2019 to Microsoft after several years of wrangling between the government and some of the biggest American tech companies over the deal. Today we saw Microsoft unchanged, Amazon up by 4.7%. Recapping, a retreat for the S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. As Charlie mentioned, Bitcoin trading higher by $66. It's at $33,926 per Bitcoin right now. Well, he's the director of the Amazon Prime documentary Blockchain City, also the upcoming film Bitcoin Dilemma, also an author of several books. It's Ian Kahn, technology futurist, documentarian, author, joining us on the phone from Toronto. Ian, thanks so much for joining us on Bloomberg Business Week. How you doing?
I'm doing well. Hey, thanks for having me. And today I'm actually in Princeton.
Oh, you're close by. Great to hear. Well, next time we're going to have to get you in the studio here at Bloomberg headquarters. Ian, I wanted to talk a little bit about, sort of start at the top here, because we're lucky. We have quite a few minutes with you today.
Sure.
Explain blockchain and the promise that you think it offers.
So blockchain, I think, is the most confused technology, but really, it's, for me, what blockchain signifies is peace of mind. That's how I equate that technology to a result, peace of mind, because it takes care of trust issues, it takes care of hacking, it takes care of data protection, it takes care of a lot of things that traditionally we have been unable to do with databases and computer technologies that we've had. And that's what blockchain does. In a very complicated way, yes, it's being defined as a ledger in the sky, and it's an immutable ledger of records. But hey, I love the simplified definition, which is peace of mind technology, something that creates trust and enables trust.
Give me a more tangible example than that. Something that you think has been improved by blockchain technology, or will very soon be improved by the blockchain?
Of course, there's many different use cases of blockchain. I love the ones that are happening in the food industry. Australian beef exports are about the fake Australian beef exports, counterfeit Australian beef exports are about $2 billion industry. And these foods, we don't know what their origin is, but they're stamped as Australian beef. There's a company, I believe, beef chain, that's trying to solve this problem by certifying beef that originates from Australia. It's stamped at the beginning of the process of export, and you can scan the package at the grocery store and see the whole journey that this packet of beef has taken. There are examples such as Walmart is doing something with produce tracking and lettuce tracking, and it's got uses when you're tracking the spread of diseases like salmonella or any other contamination of foods. There's examples from the logistics industry where transportation of certain types of equipment or goods or vaccines, as an example, has to be done under controlled temperature, under controlled conditions. And in a traditional industry, traditional refrigeration industry, if the power goes out on one of these units, it's kind of hard to figure out what has happened. But with blockchain-enabled container ships that are temperature controlled, you can verify that information really quick and figure out that there's something gone wrong. The reason why we're able to do this is because you can't manipulate a blockchain database. You're unable to insert records in it or modify it in any way that is not authorized.
So let's use this beef example from Australia that you talked about. So once it's been, and I don't want to say stamped on the blockchain, but how is it associated with the blockchain? Like, what is the physical thing that becomes a part of this beef on the package that puts it on the blockchain?
So blockchain is essentially a database, and everyday people, you, me, the beef industry, the farmer, are never going to touch blockchain as such.
Right.
But it powers the underlying system on which.
But it needs some sort of barcode.
So
it needs something that associates it with the blockchain, right?
Correct. And you can use RFID or barcode.
Okay.
I'll give you an example. So at the beginning of the farm, you can have, let's say, cattle that are at this farm and they're taken to the harvesting site. Right there at that site, you have a barcode that's generated associated with a certain animal that tags that carcass through its journey as it's processed and packaged. That barcode signifies the start of that journey. As that barcode progresses through the processing plant, through the shipping, through the logistics, and it reaches the end of its journey, your information is continuously being added to that.
Sit tight with us, because we're going to do some news and come back in just a few minutes and also talk cryptocurrency, because we haven't talked about that as a form of use of the blockchain. It's Ian Kahn, technology futurist. In the meantime, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden expects 160 million Americans will be vaccinated by the end of the week. But he says with the Delta variant spreading, it is crucial to step up vaccination efforts in those communities where people are hesitant. He says we cannot afford at this point to become complacent.
Now we need to go to community by community, neighborhood by neighborhood, and oftentimes door to door, literally knocking on doors to get help to the remaining people protected from the virus.
Biden says his administration will also be sending more vaccines to primary care doctors and other health care providers. Today marks 6 months since the riot on the U.S. Capitol, and now a Republican congressman who gave a fiery speech ahead of that assault says he cannot be sued over it.
Alabama Republican Mo Brooks is responding to a lawsuit from fellow Congressman Democrat Eric Swalwell of California. It accuses him, former President Trump, and others of inciting the riot 6 months ago today. In a filing, Brooks cites the Westfall Act, which protects federal employees from being sued over actions related to their jobs. A federal judge in Washington has accepted Brooks's filing. Swalwell had argued the Republican missed a deadline to respond. In Washington, I'm Nathan Hager, Bloomberg Radio.
Russian government hackers apparently breached the computer systems of the Republican National Committee last week. Around the same time, a Russia-linked criminal group unleashed a massive ransomware attack. Two people familiar with the matter tell Bloomberg hackers were part of the group that's been tied to Russia's Foreign Intelligence Service. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy. Well, I'm Tim Stenevec, and I'm in the Interactive Brokers studio in New York. Joining me now is Charlie Pellet. Charlie, among the most read on the Bloomberg terminal in the last eight hours has to do with Robert Brockman, a billionaire who has found himself competent to stand trial in the largest tax evasion case in U.S. history. This, despite his claims of dementia, prosecutors said in a court filing.
Indeed, he is the 80-year-old former CEO of software maker Reynolds and Reynolds. He could be tried on charges that he evaded taxes on $2 billion in income and laundered money. Brockman's lawyers say dementia has left him unable to aid in his defense.
Well, prosecutors disclosed the findings of the experts in response to a Brockman filing, which sought an 8-week extension to an August 6th deadline for defense lawyers to file expert reports. Brockman lawyers said a geriatric psychiatrist advised that they need time for more medical examinations relating to his competency because of his, quote, recent hospitalizations and current health condition.
Indeed, and prosecutors have said that Brockman may be faking his dementia, noting that he remained the top executive at his multi-billion-dollar firm until November of 2020. In their filing, prosecutors objected to the position of Brockman's lawyers that the government, quote, is gratuitously publicizing information about his medical records. Prosecutors say Brockman put his medical condition at issue by seeking a competency hearing and filing more than 100 pages of unredacted medical records.
Prosecutors wrote in the filing, quote, the fact that the experts believe the defendant is faking his alleged incompetency is highly relevant to whether the court should grant his late request to further delay this case with a continuance.
Indeed, certainly a story we'll be hearing more about, certainly a story that we'll be covering for you here on Bloomberg. U.S. District Judge George C. Hanks Jr. has scheduled a competency hearing for September.
And once again, Brockman has been accused of evading taxes on $2 billion in income. This is Bloomberg Radio, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Tuesday today, back to work Tuesday after a long holiday weekend. The Dow, the S&P lower, retreating from records. A new high today for NASDAQ and the NASDAQ 100 index. Right to the numbers, NASDAQ up today by 24 points, up 0.2%. That's the composite index. The NASDAQ 100 index advanced 0.4%. A down day for the Russell 2000, slumping 1.4%. Bitcoin, a topic we're discussing, up today by 0.3% right now, 33,942. Stocks fell, snapping a streak of 7 consecutive closing records as a plunge in Treasury yields to the lowest since February weighed on banks and small caps. Again, the Russell 2000 down 1.4%, 10-year yield 1.34%, S&P down 8, a drop there of 0.2%, the Dow down 0.6%. Gold up 0.3, $17.96 the ounce, and West Texas Intermediate crude down 1.9%, $73.71 a barrel. The ride-hailing firm Didi Global plunged 20% after a Chinese regulator ordered the removal of its platform from app stores days after its U.S. listing. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to it with Ian Kahn. He's the director of the Amazon Prime documentary Blockchain City, also the upcoming film Bitcoin Dilemma, the author of several books as well. He joins us on the phone from Princeton, New Jersey. Ian, right before the break, we were talking all about applications for blockchain that were what I would consider not non-financial. You didn't mention cryptocurrency once, so I want to dive into that right now. Why didn't you mention cryptocurrency as one of the top applications for blockchain technology? Because I think that's where a lot of people associate it with.
Absolutely. I think cryptocurrency is one important side of blockchain, but not the most important side, and that's my opinion. And it's because cryptocurrencies are in a very initial development phase right now. Yes, Bitcoin has been out there for the last 10, 12 years, but it's ways ahead until the financial systems globally accept cryptocurrencies, if they do, as a stable form of payment or asset class. But that's happening very, very slowly. The other applications of blockchain, in fact, are proceeding really much rapidly, and the applications are tremendous. From insurance industry to logistics to food to retail, education, music rights, intellectual property. There's a limitless number of applications. Crypto is just one of them.
When do we get to a point where people like me don't ask you questions about applications for blockchain technology? That is, where it's something that is so present in our lives, if ever, that we'll all know what it does.
Yep. I think it'll be still some time, and it might happen in different waves across the world. It may happen in certain regions or countries that are fast for adopting digital money or cryptocurrencies, and it might take decades in some other parts of the world. And it all depends on adoption. It all depends on how progressive financial systems and governments in those countries are. We're seeing some countries adopt Bitcoin as a form of currency. El Salvador just did that some time ago, although, yes, a very small nation economically, but that push has started to happen. Will that happen in the United States or China or one of the world's largest economies? It's a big change, and I don't believe it will happen just in a few days.
Do you think it will happen with Bitcoin? That will be the cryptocurrency? Or do you think, one thing that I hear from a lot of experts in people in the space is they've said, okay, well, blockchain technology is like the underlying technology that the internet was in the AOL days. And AOL, though, is like the cryptocurrency of Bitcoin. So the technology is there, but that's a very early technology. And what you're going to see built on it will significantly surpass what's available right now.
I think Bitcoin is, it has the hype associated with it because it was the first cryptocurrency that was out there. It has a very limited number of cryptocurrencies, Bitcoins that will ever be generated, 21 million. And so it's got a few of those factors associated with it. In my personal opinion, it still has challenges. It's still has to overcome those challenges. And some newer cryptocurrencies are way far ahead, way faster, and have got much more utility than just Bitcoin. But it's one of the popular ones, right? Because it was the first to market. And right now is also a time of hype for cryptocurrencies. And we've seen that, when certain people are tweeting about Bitcoin, the prices are going up. When they're not tweeting about
certain
Bitcoin,
people, Elon Musk.
tanking. Yes, Elon Musk specifically.
Yeah.
Specifically. So it's a very hype-driven era where consumers are taken by what popular figures in the tech industry are doing, and which is not right. Which is a challenge with Bitcoin, that its own fundamentals are better than that, and it doesn't deserve to be taken up and down like that. So that's my opinion on that.
Ian, do you own any cryptocurrencies?
I do, and it's a very infinitesimally small amount. I have deliberately done that to stay away from any kind of question that it may arise. I own next to zero cryptocurrencies.
Are there certain cryptocurrencies, though, that you are more bullish on than others?
In the short term, I think, of course, Bitcoin stays the most popular one. I like Hedera Hashgraph, and I like Ripple a little bit, but I wouldn't push anybody to buy them or not buy them. Do your due diligence, because there are so many factors that are driving these cryptocurrencies. Some are fast. Some have a limited quantity. Some have an underlying technology. And I interviewed somebody on my documentary, The Bitcoin Dilemma. It's Dr. Lehman Beard, who invented Hedera Hashgraph. And it's a cryptocurrency that's much faster than Bitcoin, and it's got some really good things happening with it. But please do your due diligence, right? And don't go with hype. Do your due diligence.
Hey, Ian, when you think about the future uses of cryptocurrency, I wonder if you do see, like a country like China actually going through and building its own digital currency and what that means.
I think China is doing something very interesting, and we know they've cracked down significantly on cryptocurrency mining, which means they are not entertaining cryptocurrency mining in China. Great. Now, what will they do? There's a couple of things they could be doing. They could either be creating their own cryptocurrency and starting to plan the next few years and decades and how that would work. And also, they could be looking at the digitization of their own currency, the yuan. And so there's two different things they could be doing. China is really an unpredictable adversary. We really cannot predict what China is doing because of all the reasons underlying what China does.
Do you think?
I wouldn't be surprised if they come up with their own cryptocurrency that they use internally, but at a global level, it might be a little bit of a different take.
Do you think the U.S. will be able to regulate cryptocurrency?
I think it's going to be at least a decade before that regulation happens, although states like Texas have started putting the framework in place. They're attracting mining companies, and they're kind of working on that regulation. I think overall, the United States as a country, it might be a while before that happens.
Ian Khan, I love talking cryptocurrency. Thank you so much for taking the time and joining us on Bloomberg Business Week Radio. That's Ian Khan, technology futurist, documentarian, author, joining us live on the phone from Princeton, New Jersey. Well, let's now bring in Sound On's Joe Matthew, whose show starts in just a couple of minutes on Bloomberg Radio. Joe, what's on the agenda for this afternoon?
Tim, well, I'll tell you what. We've got a lot to talk about. Once again, I thought the summers were supposed to be quiet around here in Washington, but we're going to start in the oil patch. What in the world went wrong at that OPEC meeting over the weekend? Anne-Marie Horderin will be with us, Bloomberg Washington correspondent, and a couple of smart conversations that will follow. We'll have energy expert Dan Yergin help us figure out what went on and why prices went down, Tim.
Don't miss Sound On with Joe Matthew today at 5 p.m. Wall Street time on Bloomberg Radio. I'll be listening. Thanks, Joe. This is Bloomberg.